just to make sure everything I say is still here, today is January 26th, 2017. I am your somewhat handsome, relatively intelligent, thinner all the time webinar host, Mike Leidick, one of the partners here at backtothefuturetrading.com. We've been in business now close to 10 years. We've got about 4,000 customers in every major financial market of the world. Our big claim to fame is the Flux data mining software. It's the only kind of software, I believe, in the world that allows retail traders like yourself to see into the future in any market you're trading, from 30-second, 1-minute charts out to 4-hour and daily charts, to understand when the market you trade is most likely to do the next thing. Okay, that's sort of who we're all about, and we believe that retail traders deserve to have access to the same edges that the banks do. And so I want to show you today something that I believe every institutional trader, every banker in the world is aware of, something you might not be aware of. And before we start that, I just want to, for posterity's sake, cover all of our legal bases and help you remember that trading is an extremely risky endeavor. All forms of trading carry a very high level of risk, so you should only speculate with money you can afford to lose. In addition to that, trading in the futures and foreign exchange markets, the equities markets, binary options, it's a challenging opportunity. But again, do not invest money that you cannot afford to lose. Every effort's been made to accurately represent our product and its potential, but however, there are no guarantees. Please make sure that you do your due diligence and take responsibility for the signals that you do trade. Hypothetical and simulated results are, of course, those very same things. They have certain limitations, and you can read into those limitations in our CTFC disclaimer here and on our website. All information that I'm about to provide to you is for research and educational purposes. We are not certified trading advisors. We are not legally able to tell you or show you even where to get in and where to get out live in the markets. That would be considered trading advice. Please seek out and work with a professional certified trading advisor in the event that you want that kind of trading advice. Again, high risk warning, big boy pants, big girl pants here. Be aware of the risks in investing in futures, forex, and options, and willing to accept them. These are the kinds of common sense things that we hope that you'll understand going forward. Sort of boilerplate, generic stuff. We're required by law to mention that going in, so we want to make sure that you're aware of those things before we get started. Okay. There, from 1920-ish forward, were three guys who changed the face of trading. There were three men that I believe are responsible for many of the ways that most of us trade today. And for those of you that follow structure in the markets, one of the guys that you can thank for that was named Ralph Elliott. And Ralph Elliott is the person responsible for analyzing things like three waves to a top, the A, B, and C wave, X to A to B, B to C, C to D, breaking the market up into wavy chunks. Okay, that's the guy you want to blame for that and or give credit, depending on which word is better suited. If you're talking about measuring, looking at, following, or analyzing volume in relation to price, the knucklehead responsible for that was named Richard Wyckoff. And Wyckoff had a very focused theory about the markets. We'll talk a little bit about part of that in a minute. But he believed that if you really wanted to understand how markets were moving and behaving, what was happening internally, you followed volume. How many contracts were traded? If people put money where their mouth was, that old adage or expression comes to mind when we talk about Richard Wyckoff. I think the man who has confused and intrigued simultaneously more people than anyone when asked, who would you have lunch with? If you could have lunch with anyone, past, present, dead or alive, it's a close second for me between Jesus and WD Gann. I have a lot of questions, and I wanted to show him our software. If there's a heaven and if he's in it, I will scribble some stuff on a piece of papyrus and ask him if we were close. I think we are really close on a lot of the things that he said, and for those of you that are customers this year in our upcoming spring conference, I'm going to show you something that will really rock your universe, I think, and gets us as close as we've ever gotten to the full picture of it. So we're still learning, but Gann, I think, intrigued people the most because his complex invoked a tether to the natural world. Elliott and Wyckoff said, just look at the charts. Everything you need to see is in the charts. And they looked backwards to get their information. That was a commonality they shared between their two paradigms, between their two processes of analyzing the market. Gann steps outside of that box. And he says, everything that's happening in the market, all the price fluctuations in any instrument, those behaviors, those actions, those movements are slaves to a natural law. Now, if you don't believe he said it, I'm going to scroll down here to his quote. And here's old man Gann, and he says, listen, at the end of my life, what I've discovered is that everything follows this law of vibration, this law of vibration, this law of fluctuation, this law of growth and rest, of rise and fall. This is what Gann is saying. This is the DNA of life. This could be the pulse and contraction of your heart. It can be the rise and fall of the seasons throughout the year. It can represent the elliptical orbit of the moon around the earth, of the earth around the sun in the galaxy surrounding other galaxies. It can represent the mating call of a woodpecker in British Columbia in Canada. It can represent the behavior between two molecules at a microscopic or even a quantum level of particles. Everything, according to Gann, including the markets, including our behaviors, is subject to this law of vibration, this rhythm in the markets. And when you hear that, when you first hear that, Melissa, hold on. How's the sound? Did it come back? Did the sound come back? Can everybody hear me? Somebody said they can't hear me. Can you guys hear me, yes or no? Okay, sweet, thanks. When you hear these theories, between the three men, Gann is the most obtuse. He's the hardest to digest. And it hurts your head to think about it. So one of the things that I'd like to do is send you all a link to look at later in your studies after the webinar. If you go ahead and look in your GoToWebinar chat box, I've pasted you a link to this page. And for those of you watching the video at home later, it's traderslog.com/Gann interview, Ganninterview. And so they interviewed Gann way back. In fact, Wyckoff the third guy of the Trinity, Wyckoff interviews Gann. He was running a magazine of his own while he was trading. And he hired people, he directed people to watch Gann trade to see if the rumors were true. And this is the resulting article from that. And so I want you to read this paragraph with me as we talk about why markets move the way they do. It appears to be a fact that Mr. Gann has developed an entirely new idea as to the principles governing stock market movements. He bases his operations upon certain natural laws which, though since existing before the world began, have only in recent years been subjected to the will of man and added to the list of so-called modern discoveries. We have asked Gann for an outline of his work and have secured some remarkable evidence as to the results obtained therefrom. Very formal, right? Not many people talk that way anymore. So Wyckoff says in this paragraph, hey, I've been following this guy. We've got some pretty amazing results. And the reasons behind his trades are related to nature. Okay? And then look at this next paragraph. And I direct you to go back and read the whole article when you're finished today. We submit this in full recognition of the fact that in Wall Street, a man with a new idea, an idea which challenges the traditions, violates the traditions, and encourages a scientific view of the markets, is not usually welcomed by most traders because that man stimulates research and thought. Most traders hate thinking and researching. I paraphrase there a little bit. But even back then, the concepts of Gann were difficult for a lot of people. So difficult that many people just said it's not worth it. He's making thousands of dollars, turning $10,000 into $100,000. But it required a lot of thought to figure out what he was doing. I want to direct your attention to a couple versions of the natural laws that I think Gann was referring to. And I want to maybe stimulate some areas of your brain, of your perceptions that you haven't considered before. Okay? This is an example of that law of vibration we were talking about earlier. And what I have here is a sunspot cycle chart. And I promise we're going right into charts. It's 4:31. By 4:45, we're not looking at any more PowerPoint slides. We're just looking at charts. But I want you to see the principles governing some of the concepts that we're talking about. So far, so good? Anybody freaked out yet? Weirded out? Speed it up, Michael? Okay. If you're not sure what sunspots are, they're giant black pimples on the surface of the sun. And we can count them. We can count them looking through special telescopes. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, so on and so forth. And sometimes the sun has a lot of spots, and sometimes the sun doesn't have very many spots. And here's the thing. When there is a spot, a tremendous amount of radiation heads towards our planet. Heads out in all directions, but a lot of times it's directed towards us. And at every one of those black spots, there's a huge coronal ejection that comes out, these spectacular fire arcs. You can see the planet Earth in relative scale to what happens at these sunspots. Okay? And so those spots, the number of those spots, believe it or not, they fluctuate over time. The sun is more active and less active. How many of you know how bears kind of hibernate in the winter, right? They're very active in the spring and the summer, and they feed voraciously into the fall, and then in the winter they're very quiet and there's no activity. Our sun behaves that way. And so what a lot of economists have figured out in relation to that involves what's happening on this chart. You see, Gann figured out, and economists have figured out, some wonderful things of consequence to us as traders in relation to sunspot activity. For example, Melissa, can you see what happens? This is a chart of recession years. Everywhere you see a gray vertical line is years when the United States was in a recession. And can everybody see when those recessions took place in relation to the sunspot cycles? I'm just going to highlight the sunspot cycle where it crossed the recession year. Dennis, what do you think about that when you see that as I fill these in? Do you think that's a coincidence? Steve, do you think that's a coincidence? Samson, what are the odds that those things line up all the time? Robbie, what do you think? Can everybody hear me? Okay. Dennis, you said something very, very interesting. You said, hey, that's really remarkable. Very interesting. Here's what I've discovered, and I'm doing more research on this personally. While most of the recessions and depressions occur at the peaks of sunspot cycles, every once in a while, Dennis, something pretty remarkable happens, and we're going to look at this in the flux in a moment. Every once in a while, think about the flux for a second, those of you that are customers. And you know how when it's time to sell, Dennis, at the top of a histogram, the flux will put a red dot on that maximum point? What if we put red dots at the peaks of the sunspot cycles? And what if we put green dots at the base of the sunspot cycles? Would that be a way to accurately predict how an economy might go? Think about these questions that I'm about to ask you. If we were able to predict when the next recessions and growth periods would occur, how would that affect how you invested in the markets? How would that affect when you stocked up your 401k or IRA? How would that affect when you remortgaged your house? It's a pretty strong correlation. Do you think banks would be aware of that and maybe try to capitalize on it? If you worked for the largest investment banks in the world and you observed this human behavioral phenomenon, would you try to limit your exposure to the markets and perhaps invest more heavily in things like bonds or gold as we go into active sunspot cycle highs? It challenges how we think about the markets. Right now, you think that we're all sort of scrambling to figure out how much Apple stock should be worth because of how many iPads people buy. The reality, according to Gann, and it seems to bear out in the empirical evidence, is that we're responding to an external stimulation. We are more active, more active, more active, a furious expulsion of energy to the point of paranoia, a bubble forms, and we all go into our caves. So here's something I want you to keep in mind. Dan Black, Tracy, do you see way over here in 1934, it looks like, how the recession occurred at the bottom? Can everybody see that? In 1934, the recession occurs at the bottom of a cycle. Now here's something I want you to keep in mind. Notice all the other sunspot cycles, Dan, are at 150 or above, right? Can you see how we had periods of really active sunshine, solar activity? But when it was low, the cycle flipped. When it was low, the recession occurred at the bottom of a cycle. Now, here's something of note. In 2001 and 2002, Dan, do you see how the sunspot cycles were low again? Do you see how the sunspot cycles were below that 150 again, down around 100? It's been the lowest solar activity in recent history. Dan, where did the Great Depression, where did the Great Recession occur? No, the last one. Where did the greatest financial meltdown in the history of modern finance? 2008. Now, do you think that's a coincidence that the recession occurs in a period of low sunspot cycles? The worst one in history occurs in the same dip that we saw back here. 100, next cycle low is the Great Recession, is the Great Depression. Fast forward to here, lowest sunspot cycle in history, or in recent history, the recession occurs here. So I did a little more research. And I thought, if there's a natural law at work here, what other kinds of things could we predict? If there's a natural law at work here, if human beings are more agitated when there's a lot of radiation hitting the earth, and I know this is very touchy-feely, and they're more content, less active, less prone to be overly invested when it's quiet, then in theory, Dan, we should see other kinds of behavior peak and dip. And one Saturday, I remember researching what I'm showing you here, and it changed the way I trade and the way I look at life and politics and the world forever. And I want to share this with you here. I took the same sunspot cycle, which is predictive. We know when the next ones are coming. We know when the next sunspots are coming for the next several decades, what that cycle duration is. Dan, look at when the major global conflicts of the world took place. You see where I'm driving at? This peak is the Chinese Civil War. This is when Germany invades Poland. This is the Israeli War of Independence and the Korean War. This is the start of the Vietnamese War. This is when Libya is invaded by Gaddafi, and when Russia invades Czechoslovakia. This is when Iran goes to war with Iraq, the bloodiest battle in the Middle East to date. This is also when Russia invades Afghanistan. You're going to see a trend here with Russia. The next solar cycle is when Iraq invades Kuwait. It's the Bosnian Civil War and the Rwandan genocide and invasion. Don't worry, because the U.S. comes to the rescue at the next Sunspot cycle high with Operation Iraqi Freedom. Coincidentally, the Tet Offensive, which is the bloodiest battle in Vietnamese history of the Vietnamese War, over 15,000 soldiers killed in one battle, occurs at the solar spike high. Dennis, Snyder, Earl, Erwin, Gary, Melissa, when's the best time to buy stock in Boeing, Raytheon, Halliburton? When's the best time to buy stock in Northrop Grumman or any defense contractor? Because what I see here seems to imply, by the way, this is when Russia invaded Crimea, right here. There's a sunspot cycle right there. It's even smaller than the one before. And guys, ladies, this is where Russia invaded the Crimea Peninsula. Third time in the row at a solar sunspot cycle high. So if we look at these charts and we follow what Gann said, we can research really easily and see where we are in relation to the cycles. So Russia invades Crimea right here. This is Operation Enduring Freedom, when Bush takes us back to save everybody in the Middle East. So, Melissa, these cycles go like this, forever into the future. We kind of relatively know when the next crashes of the market are going to be, when the next peaks of the market are going to be. Now, Dan, was there a crash in 2012 or 2013? Or did the market continue to rise? Anybody? Was there a crash? It kept going up, right? So Melissa, if you had to guess, Mark, if you had to guess based off of this chart, when the next crash was coming, considering it almost always happens here, or it almost always happens here, when's the next peak? When's the next valley? (2019) ish. Okay. What that seems to imply to me is this. The governments which are controlling everything, the banks which control the governments, are operating the world on a cycle of this proportion. Erwin, is this too crazy or does it make sense? Clint Foreman, is this too crazy or is it making sense right now? Because it's going to apply here in a moment to the intraday cycles. Tracy, am I on an okay path, or did I go to Californian granola on everybody? Okay. Here's the thing. Here's how the world works. Ready? And I'm going to blow this up. Okay. If I go too nuts and I'm frustrating you, please bring me back and I'll stop. Here's how the world works. Sunspots equals good radiation, people buy. Until we hit a peak bubble. People overstimulated. It's like giving a kid too much sugar. And then we have a pop. But Clint, the government still need to make money. The problem is at the high, guess what? No más dinero. Melissa, where do we get the money to keep the bank engines rolling at the high of a peak? Michael Lee, where do we get the money? Samson, how do we get more money in the bank's coffers? Nope. We start a war. Who pays for the war? How do we pay for the war? Bonds, taxes, Fed prints money. The grandchildren, future generations pay for the war. And so the banks invest in the companies that drive the war machine. All these contractors that pay, that get $750,000 to build a school the size of your garage, right? The $100,000 hammers. That's where they get their money. And so the war continues, the war stops, and they get to the bottom. And Melissa, guess what? They start it up all over again. And this has been happening for a century. Right on time. So look at what Gann says. Gann says over 100 years ago, now by a study of the time periods and time cycles, you will learn why market tops and bottoms are found at certain times. If you come back and look at the data, we see charts like this one, which shows a correlation between sunspot cycle highs and lows and the U.S. unemployment rate. It shows a correlation between how much radiation is hitting us, the good stuff. Think of it like a drug. It affects us psychologically, it affects us physiologically. How many of you know a nurse or a police officer, an EMT, that would tell you people get really crazy at a full moon? Anyone ever hear that? Done a little research into that? People tend to lose their mind. Oh, it must be a full moon. We sort of know internally that there's a connection here back to the natural world, but our enlightened society does not believe such things. We are in full control of our faculties at any point in time. This is hogwash rubble. Don't listen to this man. We're fine. But here's what I've been watching. When the U.S. unemployment rate has a trend line, Dan, it gets broken right at a sunspot cycle high. When the U.S. unemployment rate has a trend line, it gets broken right at the sunspot cycle high. Everybody see that? Clint, do you see that line that I'm drawing right here? Trend line, U.S. unemployment rate, sunspot cycle high. Trend line, U.S. unemployment rate, sunspot cycle high. Look where they're all occurring. Highs and lows. Highs and lows. Highs, 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 and lows. So what this seems to imply, just me, it seems to imply that the markets are not random, that there is a rhythm and an order to the world around us. It seems to imply that if you exert a little mental power, a little intelligent thought, and try to understand why people buy and sell, why these bubbles occur when they do, when this solar sugar gets in our bloodstream and we behave like 7-year-olds in a candy store with the inevitable crash, there is a certain power and awareness and now proactive ability that comes from these cycles. So Dan, this is in relation to the charts you and I were going over the other day. Same principle. We're tapping into these energy cycles that predictably tell us when banks are about to capitalize on a human vulnerability. What do you call someone who picks on somebody that's weaker than them or not as smart as them and takes advantage of that person? Phil, what would you call somebody who does that? Nigel, what would you call somebody who takes advantage of someone who's not aware of a vulnerability that they have or a deficiency? What do you think? What would you call somebody like that? Now. You'd call them a bully. You'd call them a bully. Someone who has more power, that takes advantage of someone else's weakness and vulnerability intentionally for personal gain and benefit is a bully. My desire for everyone in this webinar this afternoon, my desire for everyone here is to take the power back. It's achievable. It's possible to take that power back, to create an intraday awareness of our vulnerabilities and trade when the banks trade. Okay. How do we do this intraday? Pretty interesting stuff, right? On my chart is a set of histograms for the euro currency today. And we'll look at several different markets to really prove beyond a reasonable doubt that this is happening. These histograms, in relation to everything we just studied, Dan, they mirror, they reflect the kind of oscillations that we saw in what? In this chart, right? The histogram isn't too far off what we saw in the sunspot cycle. It is a vibration in the market. And I gave you these vibrations 2 days ago. Okay, so I send the email out on Tuesday to a web page with a link that looks like this. So anyone on our mailing list, gets an email sent to them with a link right here. Okay. So for the euro currency today, the vibrational analysis for today's market, and this was given to us back on Tuesday, was the following. And so while that example of solar cycles is still fresh on our mind, I want to remind everyone what we were looking for at the peaks of solar cycles. Dan, what usually happened at the peak of a solar cycle was a market crash, right? And so we could, in theory, without knowing where these signals come from at first, Dan, would it be fair to imply when we got to these times intraday that the banks, the bullies, were most likely to try to push the market down when people were about to have a sugar crash? A little one. Is that fair to say, Clint? Anywhere the histogram has a peak, if we study intraday cycles, it's fair to assume that when we arrive at these peaks, we should see some kind of intraday selling pressure. And then vice versa, with that example still fresh on our minds, any place we see a peak below the zero line, don't get confused by the colors, just look at where the dips are in relation to the peaks. Anywhere we see a dip, based off of that example we were just looking at, should seem to imply that markets should experience some kind of lifting pressure. Everybody stop and breathe. This is hard. This is hard to think about. It's hard to act on. It's hard to wrap your brain and consciousness around. I know, because I'm a relatively intelligent person. Over there is a degree. Here, I'll show you. For those of you that read the forums and don't believe it, I actually know stuff. Hanging on my wall is a degree. I went to a tough school, and they gave me this piece of paper that said, hey, you're pretty smart. And this is hard for me to get my head around. So I can appreciate what you're going through, but I promise you, if you stay with me a few more minutes, we're going to get through this. Our software is designed to look backwards in time, to find the cycles Gann talked about, to find the promised land of cycles. Ready? Time is the most important factor in determining market movements, and by studying the past records of the averages, you will learn for yourself that history does repeat, and that by knowing the past, we can tell the future. So Clint, what does it seem important to Gann for us to do to prove this works? That appears to be the key. Here, I'll draw a little key. Study the past, and you will be able to what? Tell the future. Now, how do we do that? Well, number one, we need to decide what direction in time to look. Where do these histograms come from? I'm breaking up the month into weeks and the weeks into days. And our patented process looks the following way at the markets. Number one, today is Thursday. So, Clint, I advised the computer, I told the computer, CJ, Chris, Jitendra, Larry, Mamie, Perry, Yuri, I told the computer last week to go this way in the past. As soon as the market closed last Thursday, I sent the software vertically on my calendar. And Yuri, Mamie, Nigel, it went back and it looked at all the times the euro currency went up and down. It looked at all of them. And I sent it back several weeks historically into the past. And Yuri, at the end of the market on Thursday last week, the computer came back and it gave me this chart. It gave me the momentum times and it gave me the trend times. Does that make sense, Dan? The computer was in essence saying, hey, Michael, I've gone back and looked at Thursdays over and over and over again, specific to a weekday. And I have found that 7:30 in the euro currency futures market is a selling pressure cycle time lately. Be aware of it. It's coming up in a week. I have found that 8:48 and 9:21 are buying pressure times in the euro currency because it happened so frequently in the past. Study the past averages of the markets you trade, and you will be able to prove for yourself that history does repeat. When my teenage son comes home from school, he's in high school. He comes home and he takes out the garbage right away. He looks around the house to see if there are any unfinished chores, and then he fixes them right away. And then he asks my wife in a very thinly veiled manner if it's okay if he can play Xbox. Now, when he plays Xbox, he plays Xbox. It's his life. All of his friends, they all get together in a private virtual room and they blow crap up for hours. It is a pattern every day at 3:30. Bum, 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 chunk, garbage. Bum, 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 chunk. Lets the dogs out. Mom, is it all right if I play Xbox? I got all my homework done. Every weekday of the week, 3:30 to 3:45, you will see that behavior pattern. Next Thursday at 3:35, you will hear, boom, 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 chunk. Mom, I just took the garbage out. Is it okay if I play Xbox? The computer is saying, Michael, I've studied the people who trade the euro currency, and this is when they ask their mom to play the Xbox. Next week, be ready. Get it? Does everybody get that? I'm studying with a trend filter down below, using a moving average, a big fat moving average as my filter, and I'm using a momentum filter, in this case a MACD, for my shorter term nooks and crannies, pullbacks and extensions movement. Overall big move, little moves inside, legs. So Dan, that's one way we can leverage time. The other way would have been, before today's market opened, to send the computer back horizontally. Boom, boom, boom. And I could have said to the computer, hey, I would like for you to look at what happened Wednesday, Tuesday, and Monday. Are there any times lately during those days where stuff happened? The one is called a vertical analysis. We'll put a V here. And that's the one all of the histograms I sent you are based on. All of the histograms I sent you on Tuesday were based on a vertical analysis. What happened the prior weeks of each of these days? What happened prior Wednesdays? What happened prior Thursdays? I have it for Friday tomorrow right now. I have it for Monday of next week right now. I have it for Tuesday, Wednesday, and Thursday of next week right now. So when I use a vertical analysis, I have the times 5 days in advance. Make sense? If I use a horizontal analysis, I have the times 24 hours in advance because they're ready for me the day before. Anyone else not getting audio? This complaint is coming up over and over again. I'll type it. Okay. Let me just write Nigel a note. Okay. All right. Okay. So we can go back in time and we can look for these cycles. We can go back in time and we can look for these cycles intraday. If there are large fluctuations in this solar sugar that's powering our greed and powering our fear. George, Melissa, Darren, if there are large fluctuations, cycles that repeat, that drive very large movements in buying and selling activity, depressions and recessions and explosive growth and explosive bubbles, can we theorize that day to day, intraday, there are smaller fluctuations? Earl, Ted, can we assume there are smaller cycles intraday in that same solar sugar that cause people to have small bursts of explosive growth or small bursts of panic and fear? It stands to reason there are big ones and little ones. I'm going to turn my camera off for a second. See if that helps with the audio. Okay, so when the computer came back with this result, we have had that now for 2 days at least. I've had it for 5. You've had it for 2. And so what stands to happen next is the crux of why you're here. Did it work? Did what we were expecting to see happen at these times? Because we've had them for 2 days in the past. That's really the proof of the pudding, isn't it? Let's take a look. I'm going to pull my charts down. And I want you to see what happened at these times. Now I'm going to go through them by myself. This was for today's market. And I want you to see step by step what we were expecting and what actually took place. Everybody with me? Okay, so Earl, I'm going to go through, Nigel, I'm going to go through what the histograms told us to expect 2 days ago. And then we're going to see if what we were expecting to see happen actually happened. Fair? Okay, let's go. At 2:03 this morning Eastern, 5:03, 7:03 London time, we were expecting selling pressure in the euro currency. And at 2:03, Nigel, did we get selling pressure? The software puts a red dot to correspond with the times we were expecting selling pressure. We were expecting that move to stop and people to start to buy again around 2:48. We were expecting the next round of panic, the next little mini depression or recession to begin between 324 and 348. Up top, look at what happened. 324 and 348. Okay. 421 we have a failure. I'm going to come back and analyze this one with you, and I'm going to come back and analyze this one with you, because there's one more trick to those two signals that I'm going to show in a moment. Let's leave them on the back burner. Ready? The next signal was 5:33. We were expecting buying pressure. That's 10:33 London time. And look at what happened. 7:30 this morning, U.S. session, London lunchtime, both markets in force. We were expecting selling pressure until when? 8:48. That's when the markets were supposed to go up or stop falling. Go up or stop falling. The next pressure time was at 9:21, which was a trend reversal time right here. We're then waiting for buying pressure until when, Nigel? 10:15. We were then waiting for the next round of buying pressure where the markets would stop falling or start to go up at 10:54. Okay, now we come into 11:18, and I'm going to put a circle around this one because it's a special signal. And I want to direct everyone's attention to this bottom histogram. Nigel, what does this signal seem to imply down here? When the histogram goes back and forth and back and forth and back and forth and back and forth in a small compressed area, it seems to imply congestion. Did we see an example of congestion at the same time we were expecting to see that happen in the actual market 2 days later? That's a rhetorical question, right? The next time that we were waiting for a little burst of solar candy trader crack was at 12:27, and then again at 1:12. And there was another section of chop. Nigel, where? Right here. And you see what happened here? Earl, if I knew this was coming, who else knew? If I knew these signals were coming, who else knew? If I can do this, who else can do this? That has the power to move markets like this? Exactly. Now, Earl says anyone that has your software can do it. Thanks, Earl. That's true, by the way. Now, in your GoToWebinar chat box, or in your GoToWebinar control box, I've given you two books. Let me take a screenshot to show you what I mean. If you look in your GoToWebinar control center, there are two books that look like this. Can everyone take a peek real quick and see that you have this? It should be under the title Handouts of your GoToWebinar control panel. And if you're watching this video later online, I'll put a link in the description of the video to the handout so you have it. What we've just looked at encompasses the first three patterns of this book. I'm helping you now to decode the patterns the banks follow. So I'm going to teach you 5 words in their language that will help you with about 90% of all of the signals you see in time. I'm going to teach you the language of Gann, the language of the sun, the language of vibration. Whatever misnomer you want to use, whatever paradigm you're following, you like the words trader sugar, I'm going to teach you the language of time and use 5 words to make you fluent in about 90% of market conversations. Ready? You're already fluent in the first one. The first one is selling pressure. When we see a selling pressure histogram, the markets tend to do this. When we arrive at a selling pressure histogram, Dan, the markets tend to, because of that cycle lately that's recurring, that small energy cycle that we're measuring and tapping into, that controls human physiology, that gives us that vulnerability, that makes us agitated. Honey, where's my dinner? I had a rough day and I want some meatballs. And I don't like your mother either. Those moments where the bad stuff happens are represented in the histograms with the peaks, the tops of these little mini mountains. And historically, Earl, when we arrive at those times, we see this behavior of a topping pattern. So traditional lagging indicators look backwards. They're always looking backwards to tell you what just happened. So a market, if you use an oscillator, can be overbought for a really long time before it finally drops down. It can be oversold for a really long time, and you just place buy after buy after buy because it never stops falling. The flux is looking this way. It's looking forward to the right. And it's saying, hey, we're coming up at an angry time. We're coming up to a paranoia time. And the bullies are about to trip people. They actually trip their stops at these times. They trick people into buying, and then they sell hard as they can go when their coffers are full. So that's pattern number one, selling pressure time. And it takes the form of two different reactions. Number one, Dan, it pushes down. But number two, if the market is in a hard trend like it is in this Trump universe, when we arrive at a selling pressure time, the market stops rising as quickly. It levels off. Everybody see what I mean by that? When the market is in an uptrend and we arrive at a selling pressure time, it's not necessarily going to be a big move down. Maybe. It could just go sideways and congest. It's a period of reaccumulation. Those of you familiar with Wyckoff market theory, the market has a rest stop. Buying and selling is taking place. People are taking profit and loading up for the next push. You've learned pattern number two with me. When you experience a dip, a V, a bottom histogram sticking below the zero line, and there's a timestamp underneath it. Efren, the data source of the histograms is past historical data. Past historical data, patterns in the past that are recurring over and over again. They're recurring over and over again. Lately. Yeah, everybody has access to 2 or 3 weeks of historical price data at least. When we arrive at a bottom histogram, the markets are historically reacting this way. This signal right here, I'm going to teach you 2 signals that will help you profitably trade the Trump rally for the next 3 years. If you don't remember anything I say for the next hour maybe, remember what I'm about to tell you. 2 most profitable setups for buying pressure and selling pressure times are the following. If the market is moving up, which we expect to see, more regulations are going to get trashed. EPA is going to be loosened up. More factories are going to open. More coal plants are going to come back online. More cars, cheaper cars, gas prices, all of that wonderful stuff. Market should continue higher based on our analysis a few minutes ago until about 2019. How do you trade it? Well, as these markets rise, when you arrive at a flux buying pressure time, when you arrive at these lower bumps and the market is trending up, that is the place we look for longs. That is the place we look for buying entries. These right here, that one setup, moving trend, use a 50 period moving average, a 100 period moving average, whatever you use it consistency. But when you arrive at that time, people are being primed. That energy we talked about, that we see on a grand scale with the solar cycles, on a small scale is happening intraday on a daily time frame and a smaller intraday time frame at these green dot buying pressure times. And as you'll see here in a moment, in the ES yesterday and today, and the Dow yesterday and today, and the NASDAQ the yesterday and today, and crude yesterday and today, each of those buying pressure times in the uptrend phases of that market are explosive. They're opportunities to have a little bit of risk and reach out for a big reward. Risk 5 ticks to make 10, 15, 20. Risk 10 ticks to make 20, 30, 40, depending on the time frame that you're watching. Vice versa. If we're in an uptrend, and Dan, check it out, ready? If you're at a selling pressure time, and the market breaks through the dot, if you're in an uptrend and the market breaks through the height of that dot, which is currently set to 3 or 4 ticks away from the candle, it is a breakout entry into higher highs. So think about that for a moment. In a Donald Trump uptrend, if none of you remember anything that own the software but this, I'll have succeeded today. In an uptrend, there are 2 patterns you're going to look for. Number 1, look for any buying pressure pattern in an uptrend. You can have your stops 3 to 4 ticks below the low of the candle. Look for explosive growth up at those buying pressure times, which is a pattern number 2. Second pattern you need to know, when you arrive at a selling pressure time, ready? We'll continue the cycle. When you arrive at a selling pressure time, watch for breakouts or price action that comes up to the height of the dot. I've been wanting to tell you about this now for a long time. Today I've been waiting all day. So Dan, when you see a candle that comes up to here and touches that area in the software, if you don't have it, it's 3 to 4 ticks above the candle. Efren, that is telling you that this consolidation phase is over. The buyers have loaded up the truck with positions at the bottoms of all of these candles. And Dan, when they get here, you can't control it anymore. It's like blowing up a bubble. Pop, and the trend continues. When that happens, Flux customers, have your stops just below the consolidation phase. Have your entry just above the consolidation phase, and look for a move 2 times the distance of that phase up. So if the consolidation range is 10 ticks, Look for a move 20 ticks above you. If that move is a 100-tick consolidation range, look for a 200-tick range. These are the two most profitable setups for the next 3 years, 2 to 3 years. If you don't remember anything I've said but this, watch for buying pressure times in an uptrend. Look for breakouts of selling pressure times in an uptrend. You will have an advantage that very few of your peers and trading associates have. Does that make sense, everybody? Okay. There are two more patterns here that we've got to learn. We learned the third one a moment ago. This monster. Ah! Chop. Ah! When you see that, it's a California earthquake. I feel the earth. This represents danger. Danger, Will Robinson, danger. It's a rattlesnake. It's chop. Or if you're a counter-trend trader, if you trade the highs and lows of ranges, that's your thing, the high and the low of the range is going to come here and here. And there are Flux customers that just after this time frame, Gig, you know it, it's the game on breakout trade, right? They'll place a buy order here, and they'll place a sell order down here. Because, Dan, the market consolidation period ends at the end of the chop zone. And the bankers pick a direction. They go one way, they go another way, but they don't stop. They don't consolidate forever. This is where all of you are losing your ass in the markets. If you don't have the software, you have no idea when these landmines are being laid out there for you. I assure you, every session there's a period of chop. And every day you can know with statistical certainty when that chop period is probably coming. What do you do when you know when it's coming? This is what I do when I see chop periods coming. Ready? Here's my impersonation of a chop phase. That's what I do. And then when it's over, I come back and I say, oh, hey, let's take a look at what's going on. Make sense? So you've learned 3 patterns. I'm going to teach you 2 more, and they're the hardest ones. Pattern number 1, selling pressure. Selling pressure looks like this, or it looks like this. Pattern number 2 is buying pressure. It looks like this, or it looks like this. I'll go ahead and color those red, green. Pattern number 3, I'm going to tuck it up here. Pattern number 3 is chop. That's your 3rd word in the language of time. Pattern number 3 looks like this. And we'll just simply say that's chop. Last 2 patterns. Pattern number 4 is a variation of pattern number 1. Pattern number 4 is a variation of pattern number 1. Ready? When we have a selling pressure time and we're expecting a down move, historically, Efren, we're expecting a move just like over here. That looks like this. Here's the time we're expecting something to happen. And we want to see a move, Dan, that goes like this. Up into the time, the banks are getting ready to sell, and then, Dan, we expect to see a reflection out of that time like this, right? Or we expect to see the banks come up into that time, and then, like we said earlier, maybe go sideways and stop going up. That's what we expect. But Dan, every once in a while, Efren, every once in a while, this happens. It moves lower into the selling pressure time. And in your books, that pattern is called specifically out on page number 15. When we see this pattern in time, the banks are getting ready to flip. The red dot becomes like a green dot. The selling pressure becomes like a buying pressure time. They went too far, too fast. They got too far to the low, too early. And so what tends to happen at those times is the market flips, it exhausts, it reverses. This red dot behaves like what? Behaves like a buying pressure time. And when we see this pattern, this is what tends to happen. We were waiting for a selling pressure time, but when we got to the selling pressure time, Dan, it occurred at a new lower low and reversed and went the other way. So I refer to these as schizophrenic times. I refer to these as double agent times or inversion times. The mirror image of the price move we were expecting tends to occur. So if the market is moving lower, 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 we have a swing low, and then here's our selling pressure time. This is the time we're expecting something to happen, and Dan, it crushes that prior swing low, and we get to there right here. Efren, do you understand how I'm looking for it to turn and go the other way? They stretched the slingshot the wrong direction. And so you don't see that I'm worming my way out of this and creating rules as I go. I've given you the book in advance. I gave you the book on Tuesday, so you know I'm not pulling crap out of my rear end to make a turd smell wonderful. This is an actual pattern. Okay, so when we see that, you're going to see me refer to this. I'm going to, on the chart, I'm actually going to put a green arrow right on that candle, and either the one to the left or the right that breaks a new low. I'm going to call that a pattern 4. Michael says it puts the word you're teaching us in context. Page 15 in terms of context, structure, or market structure. Okay, so they reverse right there. But the good news is when I see that pattern, I know what it is. I can, in the market, live in the market, identify what's happening in real time. Now, vice versa. Pattern number 5 looks like this. A buying pressure time, and we arrive at the buying pressure time at a higher high. We're all the way at the top. Born free. Ah, up here in the Swiss Alps. The hills are alive. Spinning around. The bankers are there. Woohoo! 20,000, baby. Yeah. But if it's occurring at a buying pressure time, it's like giving a kid with ADD 100 lollipops. There's so much energy that it crashes. It's unsustainable. They got too high, too fast. And so when we arrive at these times, Dan, it tends to look like this. When we get to a high at the same time of a green dot or a buying pressure time, and it's violated all those swing lows, it's arrived at the prior swing high. They stretch the rubber band the wrong direction. The banks are looking at each other saying, Gertrude, we have gotten here to the new high too fast. Should we buy here? No, prices are way too high. I suggest we take profit on sell. And then we're going to screw the traders in 17 minutes. Okay? So pattern number 5, in the context of price action, says, hey, we're at a higher high. We're at a higher high. And so here's how I define it. Ready? When we're at a buying pressure time, here's the time right here. Historically, we expect to see this. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. But occasionally, we see this. When that happens, Dan, you're going to see on my chart that I'm going to put a red arrow on that candle and the one to the left. The candle of the signal time and one candle to the bar to the left or the right. That's my window. Plus or minus 1. Either side of that buying or sell, that buying pressure time. I'm going to put a red arrow above it if it violates that prior swing high. Ladies and gentlemen, if you learn these 5, 1, 2, 3, 4, 5, 5 patterns, 1, 2, 3, 4, 5, if you learn those 5 patterns, you know 90% of what I know when looking at these histograms. I'm going to say that again. If I've just given you 90% of 10 years of my knowledge on that screen right here, screenshot it, print it out, get a tattoo of it on the back of your hand. I promise you, if you learn those 5 patterns, every day will be a little easier for you in the markets. Every day you will become more and more fluent. Now, with those patterns, let me go back. Dan, remember those candles I put circles on? Can everyone agree with me that this pattern at 5 a.m. is a pattern for lower low selling pressure time? Can everyone agree with me that this signal is this pattern right here? Here, make it even easier. Remember, I put a circle on it. I wasn't trying to be shifty. I wasn't curve fitting, but I wanted you to see what I was doing and why I was doing it. Remember how it works. Gig, candle to the left or the right. This picture here is identical to this picture. So guess what I get to do? I get to put a green arrow right there at the 457 candle. So Dan, when that happens, guess what? I'm allowed to put one of these blue arrows here, right? Because I knew in the moment what to expect. This signal at 421 touches and breaks the high by 1 tick. Take care, Dan. I will be sure to give you a recording. God bless up there in God's country. Be safe. Have a great night. At 421, we have one of these. a green dot at a higher high. And guess what I get to put there? I get to put one of these, which happens to be a signal with trend. All three. Michael says, how many bars on pattern 5 do you count as new high ground? From swing high to green dot bars, 1, 2, or 3. So Michael, I'm referencing the prior swing. So I'm looking on the chart for where that was. And so Mike, if here's the buying pressure time, that's my line in the sand. And this is candle 2. Candle 2 is going to be the signal candle. Candle 1 is the one to the left of it. Candle 3 is the one to the right of it. Mike, if any of those 3 candles touches or breaks the prior swing high, it gets a Willy Wonka golden ticket pointing down. If any one of those candles, so if you have a scenario, for example, where this candle, whoops, we'll make it blue, this candle closes higher, Mike, and then the next candle is here, only this one gets the arrow. I'm looking for a prior swing, any definable prior swing. It has to be at least 3 bars. We'll see more examples of it moving forward. Okay, so I'm going to put on those candles, just so you see I'm not being a jerk, a number 5 and a number 4. And then over here, remember when I put the third circle? I put the third circle over here at the beginning of the chop zone. Right there, guess what that is? That's a lower low selling pressure time, pattern 4. And because it's that pattern, guess what I get to put there? At the beginning of that chop zone, the software was warning me that they were getting ready to push the market up. So let me ask you a question now that we're all on the same page. Now that you know the same 5 words I know, what percentage of the time, this is my favorite part of the week, I live for this moment. I run up the stairs on Thursdays. Oh, I walk very quickly. I don't do much running lately, if you can tell. On a scale of 1 to 10, no, on a scale, ready? 0 to 25%, 25 to 50%, 50 to 75%, 75 to 100%. What percentage of the time did the histogram forecast I give you 2 days ago in this market actually play out? Was it 0 to 25%, 25 to 50%, 50 to 75%, or 75 to 100%? I need 10 people to answer this question for me before I continue in the webinar. And I'll tell you why as you're voting. Type it in here now. I need 10 people. Customers, non-customers, I don't care. I never tell people what the accuracy of the software is, because in forums online and popular futures posts, I get trashed. This company gets ridden like a rodeo horse for saying what the accuracy is. That's impossible! You're a liar! Snake oil salesman! Burn him! I need 10 of you out of the 60 of you here today to tell me what you perceive the accuracy to be. 1, 2, 3, 4, 5, 6, 7, 8, 9. One more person. Anybody else? No, Mike, it's not 100. Okay. And some of you know where this is going, but I need your help. Here's what your peers said. I just took a screenshot. This is live. In my emails, I used to say the software was 60 to 70% accurate on average in its ability to detect the times 5 days in the future where these moves using these 5 patterns were most likely to occur. I want you to think about that. I say, personally, me, having watched this now for 10 years, I say that the overall accuracy, generally speaking, where I'm satisfied at the end of the session, looking back every day for 10,000 plus hours of screen time, is almost always 60 to 70% accurate. Everyone in the room here today said it was over here. Mr. Bouzian said something really interesting just now. I'm going to share that with them, Em, if it's okay. And here's what our customers say after using the software for a while. I am a financial engineer and I was skeptic too, but now I have some hard evidence since I am a client from the end of November. These are the experiences people have, but it requires you to see this. This is why my webinar is different from everybody else's. I'm getting crazy again. I need you to see the evidence. These times represent the times you're supposed to be at the computer. They represent the times where the vault opens up. They represent the times when the doors close. Wayne says, hey, can you show a forex pair? Show me the peso. I've never looked at a peso. I don't even know what the peso chart looks like. Is there a dollar peso pair? 6M? Okay. Is everybody okay with the euro currency right now? I'm going to close this chart. No questions about this. We have an understanding kind of what's going on here, right? Now, before I finish, I want you to see something. Ephraim, do you see to the right of the chart how the times are there already? I have the times to the right of the chart all ready to go. That was interesting. Let's do that back. There we go. So Ephraim, I already have the times for tomorrow right now, right? Non-customers, look. What are we expecting at 2:18 tonight? Eastern time, 7:18 London time. What are we expecting 3:03 tomorrow, 3:15 tomorrow, 3:54 tomorrow, 4:33 and 5:51 and 5:45? What are we expecting tomorrow between 4:09 and 4:24, between 3:27 and 3:33? What are we expecting in the Asian session between here and here? What are we expecting tonight at 2:18 a.m. Eastern, 7:18 a.m. London time? Everywhere you see a peak is selling pressure time. Everywhere you see a dip is a buying pressure time. Ephraim says, how far back do you go to harvest the data? Well, you'd be surprised to know, Ephraim, that we don't go as far back as most people think. Generally speaking, Ephraim, you don't have to go back more than 2 or 3 weeks. Here's the problem that we ran into, and this is a great question. When we started looking back farther, 8 weeks, 12 weeks, 16 weeks, 24 weeks, there's a perception in the trading community that more information is better. 5 indicators is better than 2 indicators. 50 indicators is better than 10 indicators. When you approach time, there's a shift in the paradigm. In the futures market especially, not so much forex, in any of the forex pairs. When you have a look back longer than 2 to 3 weeks, Ephraim, all of the data back here from a month ago, 2 months ago, those cycles aren't relevant anymore. See, these times change. If it was always 10:08, week after week after week after week after week, it wouldn't work anymore because everyone would buy or sell at 10:08. There'd be nobody on the other side. And so what you need to do, have you ever been to the beach? Has everyone been to the beach and seen the sand dunes? You kind of have the water over here, and then over to the side, you have these sand dunes, right? And so the sand dunes, Ephraim, are getting smaller and smaller, and then they're moving over to the right and getting bigger and bigger, right? And then they start to get smaller, and then they start to build up over here as the wind moves them over. Does that make sense, this analogy? Yes or no? Don't get locked in your mental process. Look at what I'm saying and look, don't challenge it so much as hear what I'm saying. Okay. The time cycles are never solid. Let's look at it this way. Dan, what if I told you on Fridays the market sells off at 10:08? What happens if that was always the time? What would everybody be doing 4 weeks from now? Where would all the orders be sitting? There would be 10,000 contracts at 10:08 to sell. How many buys would there be? There would be 0 buying contracts, right? And so what happens over time is these histograms erode and shift. They start to get smaller and disappear. And then they'll start to pop up over here. A new one emerges. It's not static. When Gann looked back years, Ephraim, he was taking long-term trades. He was taking positions in cotton for 2 or 3 years. He was taking positions in the railroad for 18 months, 24 months, 36 months. We're looking at trades that last 5 to 7 minutes, right? That last 15 to 30 minutes or an hour to 3 hours. And so if you go back much farther than 2 or 3 weeks in the futures, the data isn't good anymore. The cycles change because all of the data back 8 weeks, 12 weeks, 16 weeks, those cycles don't exist anymore. And it's clogging the analysis up front. It's like having a heavily weighted moving average. All of that data back here, it's killing us. Okay, so you guys want to look at the peso. Can we look at the peso? 6M, I have to add that instrument. I've never loaded it. Hold on. 6M. Oh, let's put it over here. Search 6M. Boom. Is that the contract date, Wayne? 09/17? Yes, Efren, I'm recording it right now. I don't get the peso, unfortunately, in my data feed. Oh, 03/17. I can't add it. Hold on. I can't get it to load for some reason, everybody. I'm sorry. Maybe I can type it in. Nope, I don't have access to that one. I'm sorry. Is there a forex pair that we can look at with the peso in it? The euro peso, the dollar peso? No, I'm sorry, I just don't have it. $6M 03/17. 6M 09/17. I just don't have it. I would love to see it. That's why I'm trying to get it on there for you. Oh, there it is. Hallelujah. Okay. So these were the times today that the software said to look for selling pressure. I found it. I stuck with it, gig. I had perseverance. So just to reiterate, Ephraim, these are the times today that the software would have told us in advance to look for selling pressure in the peso. Everybody with me? Picking my nose on live TV. This is not moonshine. That is agua. Here's what happened at those times. Did this software work in a 60 to 70% envelope of accuracy? What do you think? Boy, it sure feels that way. All right, this is Donald Trump, and we're going to build a wall. It's going to be huge. Boop, 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 boop. Everybody takes profit. You're going to pay for that wall, and we're going to use we're going to line the bricks with Mexican cocaine. Boop, 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 boop. Take some profit. I'm going to hire 1 million DEA agents, so we're just going to live in Mexico. Boop, 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 boop. But again, the magic of it is not in what happened today. The magic of it is this. It's in knowing the times in the future. Nobody here that doesn't own the software has a program that tells them what to expect next, that far out into the future. And so here's where things get crazy when you see it working that well. And I'm going to toss you a little bone here. Here's a little bone, 6M0317 on a 3-minute chart. Ready? These are the times for Friday. Let's do it. Let's do it. These are the times for Monday. These are the times for Tuesday. These are the times for Wednesday. And guess what? These are the times for next week, Thursday. And as soon as we hit midnight, it'll populate those with times. So gig, next Wednesday at, ready? Next Wednesday, there is a 60 to 70% chance of the peso being sold off at 7.45, 8.48, 10.12, and 11.21. There's a period of chop from 11.21 to 12.21. There will also be a final sell-off in the day, potentially at 2:30 in the afternoon. Look to take profit in your shorts at 8.12, 9.21, 11.30, 12.42, and 2.47, with a possible range of short covering into the close next Wednesday. The shorter term times to sell the peso would be 7.51, 8.57, 10.18, 11.45, 12.30, 1.39, and 2.33. Take profit at 7.15, 8.21, 9.33, 11 o'clock, 12.12, 12.48, 1.54, and 3 o'clock if you're using the 3-minute signals. Some of you will take that information and you will not accept it. You'll bastardize it. You're going to add 100 indicators to it. Well, what if I put an Ichimoku cloud on there with a Heiken-Asher study and a hybrid Renko volume divergence indicator? Would that help me? No. No. You took a beautiful, lovely, simple thing and you poured 100 pounds of sugar sprinkles on it. Some of you are having a really hard time with this right now, in spite of the fact that we see the evidence, that we see those moves. And I'm telling you what to look for next Wednesday. Because why would we not pay attention at these times? If the times we were paying attention to today did this. Efren, I will be happy to tell you all of the finer, intricate details of the averages and what the parameters are when you're a customer. And this is me, not you right now. I'm sure this isn't the case. But every once in a while, Efren, someone will come to the webinar with programming experience, and they ask the same kinds of questions. What's the look back? What's the average? What's the MACD set to? What are your parameters for this? Blah, 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 blah. How do you handle that? And Efren, it makes me feel like, and I'm sure that's not the case here, they're trying to reverse engineer the software and reproduce it on their own. Okay, I used to do it in the machine industry. I would go into a competitor, into a factory where my competitor's machinery was, and I would take a digital camera with me, and I would take photos of the machinery. I had a ruler, and I would measure the gears and the sprockets and the belts to scale, I would write part numbers down. And I would ask customers, hey, what kind of power voltage you got running to that thing? What's your output? What's the cutting accuracy? Using air hardened tool steel or cold rolled steel on that cutter? So for my benefit, I know you have a lot of questions. Just because I have that phobia and schizophrenic thing in my head, try to avoid very specific questions in this webinar. Those are things I'm happy to answer for you as a customer. I'll tell you everything you want to know. No, I understand. Again, I said it's not you, it's me. So what you need to know is the moving average on the bottom is adjustable. It's whatever you want it to be. Right now it's set to a 120. That gives us a pretty big picture. The MACD filter up top is set to a 520. Much bigger moves, much smaller moves. But again, we're able to peer into the future 5 days in advance. So, Gig, let's assume the Trump rally continues, right, in the S&P. What are the times to be sitting at the computer for the next 5 days? What are the times to be watching for moves in the S&P for the next 5 days? Here's Friday, here's Monday, here's Tuesday, here's Wednesday of next week. Efren, everywhere I put a green arrow, if the market is in an uptrend, is a time you will see investors lose their minds. Everywhere you see me put an arrow is a time over the next 4 days of trading that the banks, if the market is moving in an uptrend, that you will see this market rocket up even further. Every other time, quite honestly, is going to be a waste of your time. Every other time that you're sitting there forcing a move is going to be a waste of your time. So if you're looking at, for example, a 10-minute S&P chart right here, Gig, do you see what happens at virtually every one of the green dot times in this software? To make it easier for you to see, here's what I'm going to do. I'm going to cut off every one of the counter trend signals. What if you just knew in advance what buying pressure times to look for? Efren, you see how that starts to play out? All the other times that you're sitting there are, generally speaking, wastes of time. And then vice versa. If it's below the trend line, we don't look at it. So think about that. I've just taken out half of the signals. When the market is trending up, I'm not looking at any of this. When the market is trending down, I'm not looking at any of that. So you'd say, well, Michael, how do you trade that? Very simple method in 5, 4, 3, 2, 1. Beep. When you have the software, take the dot that prints and extend a line to the right. In this case, I'm going to put, and your software will do this automatically. I'm drawing it by hand for now. Take the signal and draw a line from the dot to the right. Take the signal, draw a line from the dot to the right. Take the signal, draw a line from the dot to the right. Take the signal, draw a line from the dot to the right. From the dot to the right, from the dot to the right, and so on and so forth. Same thing over here. Take the signal, draw a line above. Most customers, when they first start to use the software, they see if they have their stop just below that line, Efren, they reach out for twice what their risk is. So, for example, at 740, your risk would be 1.75 or 2 points. So, Efren, when that happens, go for 4. When your risk is 2 points, go for 4. Over here, the risk on that setup is 4 points. So guess how much you would go for? You'd go for 8. You see how that works? Over here, your stop would be hit. If you entered here, you're taken out. Loss. If you're over here, you're eventually taken out. Loss. So you're making twice. You're making 4, you're making 12, you're losing 2, you're losing 2. You're back to 8. If your risk is here, you go for 3. Does that make sense? Your highest probability trades now into the future. Here is tomorrow. Here is tomorrow. If the trend is up tomorrow, you ignore all of this. Is it working for me? No. For some reason it won't let me draw a piece of trash. You ignore all of these signals up here. They're gone. And you focus tomorrow at 7:10, 8:30, 11:10, 12:40, and 2:40. Make sense? Why? Because when you didn't pay attention, this happened. When you didn't pay attention, you missed your entry at 10 o'clock. You missed your entry at 1 o'clock and 2:40. You missed your entry over here at 6:20. Whew. Okay. Any questions about that? We're sort of coming to the end of our journey here together. There is a version of the software that performs these same analyses on daily time frames. There is a version of the software that performs these analyses on daily time frames. And in that version, it's called the Flux Investor. There's a daily cycle marker. Okay. Do you guys remember what I said about the 2 different kinds of signals that you should look for? I said if you don't remember anything, remember these 2 patterns. What did I do with that chart? There we go. These 2 patterns. Yes, this works with tick charts. Okay. Do you remember how I said, Gig, there are 2 kinds of signals to watch in the Trump rally? Okay. Signal number 1 is a green dot or a buying pressure time in an uptrend. Signal number 1 is a green dot or a buying pressure time in an uptrend. Signal number 2 is a breakout or a touch of the red dot or the selling pressure time. And then we're looking for what? Twice the consolidation up. Remember when I said that? This is the Flux Daily Cycle Marker tool. And this comes with the Flux Investor Pack. Many of you have it as customers. Go ahead and change it so we can see it. Whew. Okay. This is after the election right here. And I want to apply the same logic that we just used in that pattern that I just taught you. Okay? It occurs on this chart in the next locations. You would be looking to enter the market back at 11.7. You had from 11.7 until 11.21. You'd say, well, how do I know when the next signal is coming? In the upper right-hand corner, Wayne, do you see where it's telling us when the next event is coming? These cycles occur in 4 sequences, in 4 phases. A phase 1, a phase 2, a phase 3, and phase 4. Advice received. Phase 1, phase 2, phase 3, phase 4. Phase 1, phase 2, phase 3. And the next one is coming in 5 hours, 39 minutes. 5 hours and 39 minutes. We're getting another one of what? These. Okay. In the direction of the trend, these are the signals to watch for. These are higher time frame entries. These are the signals, Efren, to watch for, because they go very far. From here to here was $66, $65. From here to here was $43. From this phase 1 to this phase 3 was $36. From this phase 1 to this phase 4 was a loss of 23. From this phase 1 to this phase 3 was essentially flat. And from this phase 2 to this phase 4 is $30. But can everyone see what happened at the last phase 1? Phase 3, forgive me. Efren, you see what happened here? Gig, you see what happened here? There's the dot. So this pattern here there's the bodies of the candle. I look at the bodies. There's the touch of the line right there. See it? See over here? That's number 2. Uno, dos. Un, deux. Un, deux. When it touches that line, remember I said 2 times the consolidation phase. Control, copy, paste. There's 100% of the move. Ready? Look at this now. Ready? Here's 200%. Where are we? At the top. We're at the top. What's coming in 5 hours? Another one of these. What's coming in 5 hours? Another one of these. What happens after the big red dots usually in the market? Efren, what usually happens at a phase 4 that's not a reversed? It occurs at the high and not the low. Tends to go down. It's a selling pressure. And we're at 200% of that pattern after the breakout. That is to say, ladies and gentlemen, if this candle closes tomorrow and you have a big fat red dot here and the Trump rally takes it back up to here, you perform the same thing you did down here up there, because Santa Claus is coming to town again. Again, on a daily time frame, it's the same as an intraday time frame. It's the same as a histogram. I want you focused on phase 1s and phase 2s, phase 1s and phase 2s, phase 1s and phase 2s. I want you focused on the touches and breakouts of the phase 3s and phase 4s. The touches and breakouts of the phase 3s and phase 4s. The touches and breakouts of the phase 3s and phase 4s. Until the next cycle, you move cycle to cycle. Phase 1s to phase 3s, phase 2s to phase 4s, little dots to little dots, big dots to big dots. This is the language of the banks. This is the language of time. You are speaking fluent time right now. And here's the thing. The patterns, when you learn them, are the same on a 1-minute chart. They're the same on a 5-minute ES chart as they are on a daily ES chart. They are the same patterns, scaled up and scaled down. You always know when the next bus is leaving. Those of you that do not own the software have nothing like this. When we were kids, we used to have these little plastic toys where there would be a code written somewhere, and it was a thin piece of red plastic. Anybody remember these things? It had a thin coating of red or blue plastic, and if you put it over the paper, you could see the hidden words that were on the paper, like a code. Yeah, everybody remembers that dumb thing. We are looking through red plastic right now at the banks. We are looking through that plastic and seeing what's really in the market. It is a choreographed, stereo, organized, manipulated market. And tomorrow, what are the odds? Come on, people. What are the odds that this next red dot, this huge red signal was coming the day after that? Do you see what's sitting there? What does that look like? What is starting to happen? We've been waiting for this for over a week. And when we get to it, really, you're going to tell me that right here, that candle is an accident? That is Goldman Sachs reaching up and going, We're done. Oh, you bought? You bought into that rally yesterday? I am so sorry. We're shorting now. We've been shorting the whole time. So the question starts to become, how much of this do you want to know for yourself? How much of this that's knowable would you like to know for yourself? That's really the question, right? Because if we can analyze these markets, if it works in something like the euro dollar today, where we were looking for a short at 415, from 415 to 915 or 945, the euro dollar at that time moved all the way down 60 pips. If you sold it at 815, it moved down 20 pips. 80 pips of movement in that one European drop. If you used the same stop at 130, you were taken out, you were taken out with a loss of 11 ticks. And at 445, you were taken out with a loss of 5 pips. You made 80 on the way down, you gave back 16 on the way up, using a piece of software that analyzes time the way that banks analyze time. How long will you let a bully push you around? I was bullied as a kid. I was heavy, I was chubby. I'm still heavy and I'm chubby, but I'm much bigger than I was. And so you don't tend to push me around. Last time that a guy pushed me around, he was drunk on a Southwest airline flight from Las Vegas to Raleigh-Durham. He threatened my life in the jetway and told me he was going to kill me in the parking lot. Those are fun times. But when I was a kid, I got challenged by all of the bullies on the block. And one day I resolved not to be pushed around anymore, and I fought back. I got my ass kicked. But I took some of them with me. A couple of them went home with some marks they didn't have they left with that morning. And I broke that cycle. They picked on other kids. Easier targets. The problem is some of you are very easy, willing accomplices. You're very willing to be pushed over. And you don't even know it's happening. Oh, well, just had no idea that report was coming. Let's take a look at one of the markets you guys look at regularly. And I want you to see something. I'd like you to see something anyway. Whether or not it means something to you is entirely different. How many of you trade crude futures or know somebody who trades crude futures? What's the hardest day to predict? What's the hardest day to trade? What's the hardest day to predict or trade? Inventory release day. Well, Efren, it just so happens that I gave everybody the forecasts for inventory release, inventory report day, a day in advance. You see the times? $10:45, $11:22, $10:45, $10:35, $11:22. At 9:08 in crude futures, 24 hours in advance, we were expecting selling pressure at 9:10 and 9:08. We were expecting chop between 9:19 and 9:22 with a breakout to the upside at 9:23 and 9:22. The buying pressure was supposed to last until 9:33, where the market would go up, down, and then try to go up again. At 9:39, we had a higher high green dot, which is a pattern 5, according to our book. When we saw that, we were alerted to the fact that a potential exhaustion point was about to occur. When the exhaustion point occurred, we looked to the next cycle to see how long that move would last. That next move occurred at a lower low red dot, which is a pattern 4. Pattern 4 implies exhaustion, and the market moved up out of that phase into the next signal at 10:03. At 10:03, Efren, we were expecting the market to go up into 10:12 based off of a 2-week look back of a 520 MACD and a 120 SMA. The market was then expected, according to the language of the banks, to drop from 10:12 into 10:31 or 10:35, depending on the accuracy of the indicator you were watching, the resolution. And then the software 24 hours beforehand had indicated that we were supposed to watch for a move in crude starting at 10:35 and going to 10:45, where it would what? Start to go back down. There are 5 patterns that you have to learn. I've given you a 20-page book describing each one in vivid detail. 2 days ago, I gave you histograms for some of the hardest markets in the world to analyze and trade. Euro US dollar, Euro currency, E-mini S&P, crude futures, gold futures, NASDAQ, YM, Canadian dollar, 1 minute, 5 minute, 10 minute, 15-minute time frames. And every chart we look at, 60 to 70% of the time or more, the banks follow through on their threat. I don't agree with their tactics. I don't agree with what they do. No one is going to stop them legislation-wise. No one is going to stop them regulatory-wise. But you have to ask yourself, if you can't beat them, why not join them? Why not fight fire with fire? Why not every time they open up that vault and reach inside and pull out millions of dollars and push it into the market and push everybody like a bully? Why don't you do what they do? Would you rather be a poor victim or a rich bully? Would you rather be a depleted account pawn, a gear, a cog in their machinery? Or would you rather be there when they open the vault? Can you imagine in real life what that would be like if you were sitting there and we had to place orders side by side, and every time Goldman got up to put an order in, you were standing next to them? Hey, what are you doing here? Buying just like you. You guys getting ready to push the market up? Shh! Who told you? I have the flux. I saw it. There's a buying energy cycle coming. You're going to buy now. I want to buy too. You're getting out in 23 minutes, right? Shh! Look, come on. Come with us. But just don't tell everybody, all right? Make a little bit of money. Don't be stupid. That's what I want for you. Does that make sense? That's what I want for you. I want that for you in the E-mini S&P. I want that for you in the mini Dow today. Can everyone see what happened in the Dow? Ephraim, does that look like a random market to you? The Dow hit 21,000, 20,000, yeah! We're expecting buying pressure at 8:30, selling pressure at 8:54, selling pressure at 10:15 until 11:06. 2 days ago I told you watch for buying pressure at 1106 into 1151. I was telling you to watch for selling pressure into 1203. After lunch, buying pressure 136, buying pressure 221, buying pressure 309. Everywhere on my chart there's a green dot. The market shot up. What if you just focus the next 3 or 4 weeks on all of the times where the market was expected to go higher? Wouldn't that be fun? If all we did was watch for times the market was expected to go higher. That would be fantastical. Can you imagine if you just waited for the times the banks were going to open up the vault, reach in, and push the markets around? What would that feel like? Some of you today are going to continue to do it the hard way. Some of you will say to me, Michael, I'm heavily invested in another much more expensive company than yours. I'm not profitable and I really don't understand what he's saying half the time, but I already spent a lot of money with this guy and I got to see it through. Okay. Michael, I'm a pretty smart guy and I'd like to do my due diligence on you, even though you've given me 2 days of forecast and demonstrated in the hardest markets you could pick and the biggest markets you could find that this is working in a 60 to 70% accuracy. I'm going to really dot my I's and cross my T's on you. I don't know how, but I think this is all a big sham. But I'm going to find out. Okay? Some of you are thinking, well, what's left for me to do? How am I going to do my analysis every morning? How am I going to look at all the forums and tell everybody what I think and listen to what this guy says and what that guy says and read the Wall Street Journal? I have a live feed to the pit. I can hear the audio of the traders. You're telling me this isn't more important what I have? No. And so many of you are going to leave disappointed today. There's this great story, this analogy, this scripture where the rich young ruler comes to Jesus and says, what do I got to do to have eternal life? He says, all I got to do is sell everything you have. You'll live forever with me in heaven. And it says the kid went home sad. The kid went home sad when he figured out what he had to do to get what he wanted. Many of you today, of the 60 plus people here today, will leave this webinar sad, even though I have shown you, giving you the signals in advance, giving you the setups and the interpretations in advance, coming back 2 days later and we're looking at it going, hey, that really did work, didn't it? And he didn't have anything to do with it. Matter of fact, he didn't tell us what to do at all. We just saw the interpretations and, wow, this is really happening. Most of you will leave here sad, but several of you, you've been trading for 3 to 5 years. You've lost $20,000 to $30,000. You've spent $30,000 to $50,000 in software. You don't go to webinars anymore. You're starting to break even or you're barely profitable. And this is the answer to a search that you've been conducting for a long time. You saw this webinar and said, that is what I've been looking for. I knew something like this existed. I was going to try to build something like this on my own. I knew the banks were trying to do something, and you've caught them. This is the missing piece of my puzzle. If that's the case, if you're that person, there's one link left for you.